waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called, balance base draw down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. Yeah, the crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Secrets is a vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call, balance base draw down, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. NT5 on match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision, we are the flow.
Good morning, everybody, and welcome to Seacrest Markets Live. Happy Wednesday, 4th of February 2026. So, what a very interesting day in the markets yesterday. Some surprising moves, caught some traders offside. I'm not sure if you managed to catch those trades or whether you got caught on the wrong side of them. But nonetheless, a very, very interesting day. I'm going to move my thing because you don't want to see my keyboards and my pianos in the background where I teach my children how to play piano. Let's look at me directly. So, expectations for today in the markets. What are you looking at? What are you seeing? Have you got any ideas on what trade you're looking for? Anything like that? Morning, all morning. So we were discussing the shorts yesterday, or the ideas of shorts in the S&P around that 7,000 handle. And we broke down the markets, giving you the ideas of how to do that. Whether that was obviously waiting for the confirmations to get short or waiting for the markets to actually break out above that 7,000. Now, we are trading inside a range between 6,900 and 7,000 at this moment in time, as someone's just highlighted within the feeds. Obviously, expectations are, as always, when we're trading inside a range or when price is entrapped inside a range, we can be long from the extremes at the bottoms, or we can be short from the extremes at the top. Sorry, apologies. I'm just looking at something here. So, how are we going to tackle the markets today? Now, because the markets are obviously caught between recovery in hard assets and a significant rotation out of the high-flying sector, obviously we saw a meltdown in metals last week. Definitely the signs of price of a floor. Yeah, sorry, I'm trying to check something. Cool, there's lots of comments coming in private, so I'm trying to reply to them as well. So what are we worried about today, or what are we looking at? So covering yesterday and today's scenario, obviously the US government remains in a partial shutdown. Essential services will continue, so we're still going to get key data releases like JOLTS report, but obviously non-farm payrolls has officially been delayed. Kevin Warsh, yeah, we know he's the next Fed chair, and there is a bit of a shock around the market. It pushed the 10-year Treasury yields towards 4.3%, which is primarily down to the fact he has quite a hawkish reputation. Now, what that does do, and just for those that want to understand it, excuse me, it signals a potentially faster reduction of reducing the Fed's balance sheet. Now, one point of stability that I did see was a significant trade deal with India, which was announced yesterday, and it also lowered the reciprocal tariffs, which would have most definitely provided some relief to global trade concerns. So let's take a look at ES, because I think we could really do with understanding how this market moved yesterday. So comfortably, we can see prices trading inside a range. 6,800, 6,900 seems to be the extreme of this range, with that 7,000 obviously level being the upper echelon of that range, which is obviously the previous highs that we took upon us and looked at. Now, yesterday during the call, we were discussing that price was trading. Let me go back into London just so that you can get the exact time, so that we can make sure that I'm not calling a wrong area. So between 9 a.m. UK GMT and 10 a.m. UK GMT yesterday, the market was obviously very carefully correcting to the downside. And we were holding ourselves inside some form of demand potential for prices to trade higher. We discussed the idea that obviously we're looking at a bullish pennant. Sorry, apologies. I'm getting lots of messages. So I'm missing some comments. So obviously we were trading in some form of bullish pennant wedge, which we had yesterday, and we were identifying how that trade pans out, how the price action is going to range from here on. But obviously, most notably, we got that breakout to the downside. We got that rejection. And we were saying at the time, after this particular candle here, it's too early to say that we're going to be going short. This could be a fake out, trade back into the pennant wedge, and obviously a break to the downside could allow us to continue seeing lower prices. Obviously, market traded into the demand range. We then pushed up to the upside and we respected supply. So after we respected supply, yes, it's still too early to potentially actively get short, but from that point onwards, you could have most definitely looked to get short. And obviously, as we saw pretty much throughout the rest of the London European session into the US session, we had an absolute meltdown across the markets. Now, I obviously wouldn't necessarily just trade a pattern like that. I look at volume, I look at lots of different areas of confluences, but purely from an analytical and an educational perspective, this highlights to you multiple points, multiple reasons, multiple confluences. You know, we have the psychological level at 7,000. We have the extreme supply range that we were previously looking at. We have a pennant wedge, which failed and broke to the downside. We had supply taking control. All of these gives us some form of probability that we could look to execute and take shorts. From there, entirely up to you how you do that. But obviously, you have to be mindful of a number of things, right? We're at the extreme at 7,000. Price has obviously rejected supply. We're at a big psychological level. We've broke to the downside of that wedge. Supply is now taking control. We can look for shorts inside this leg. As the US came in, that was around between these two candles. So on this candle here at 6,000, pretty much 6,977, market continued to melt. So if you're a momentum trader or you're looking at how candles form first a price action, then you could have potentially obviously looked to get short at quarter to 3 on the following candle, the next 15-minute candle. We'll take a look at the lower time frames, M5, M2, M1 if you want me to as well. And obviously I'll break that down into the market for you. But other than that, I don't really see the ability or how you would have got involved in the market, other than waiting for some form of correction inside here, which we'll take a look at. Let me just bring that for you. So that is potentially where you could have got in. That is potentially an area where you could have looked to scale into the trade had you have already been short from the European session. And if you were not privy to that due to being in the markets, potentially, we'll take a look in a minute, potentially we could have got in and around that level. Now, obviously, as we traded into the end of the day, as always, if you're on a CFD firm, whether it's a broker or a prop, you can hold those positions subject to their internal rules, i.e. if it's a prop firm, some firms don't let you hold overnight, but most do. Monday through Friday, you would have just had to take into consideration any rollover swap charges and maybe that increased spread veracity. So that, I guess that's the only downside of being a trader based that far west in the world. If you're in the UK or you're in some form of mid-region around APAC markets, you could have taken full advantage of that short from the downside. Did anyone take any shorts in the ES yesterday? Good morning. Good morning. No. So markets obviously created clean moves to the downside. We're going to take a look at this bit in a minute because, of course, the US session opened. But if you weren't already in some form of short from up here after we got those confirmations, then we could have looked to potentially get short inside here. So we're just waiting to see how that price action unravels. Obviously, as we traded into Asia, we had a very, very efficient, very, very corrective market. Obviously, none of us trade during that session, so it's not too much of a difficult position to be in. Obviously, had we have wanted to be involved from early doors, you know, if we would have got involved from the European session, then we would have been short inside here. Maybe putting our stops somewhere up there would have been fine. Obviously, initially you would have been able to get your 1-to-1. Your 1-to-5 was available. Now, depending on the risk-reward ratio, of the trade, now potentially your 1-to-1 would have been hit. Your 1-to-5 would have been hit. Obviously, if you wanted to hold throughout the duration of the US because you expected the US to come back into the market and actually drive prices higher, then you may have obviously been trying to capitalize on this trade, taking your 1-to-1s, your 1.5, However, if you genuinely believed that we were going to get a continuation in a sell-off, you've got potentially your 2R, your 2.5R, your 3R heading all the way down. Now, again, you're never going to catch the bottom. So I'm only going to highlight this for you in particular to show you what you could have potentially achieved, which is an RR of 5.5%, subject to obviously risking 1% per trade. But let's face it, realistically, you're never going to run a stop or a trailing stop that matches every tick of the candle. Your TP wouldn't have necessarily been in here unless you were targeting maybe the extreme of this move. So, you know, anywhere between 1 to 2R would have been satisfactory. If we obviously look at the lower time frames in terms of the M5, the M2, the M1, then maybe around here we could have looked to scale in. Now, obviously, how you scale in is going to be subjective to your own edge, methodology, execution style, etc., etc. But there is potential opportunities that we could definitely take a look at. Sorry, I'm just getting a few comments here. Please obviously refer to the email, Swing Cat Trades, and obviously refer to the instructions. Obviously, you won't miss out. So just refer to that and then you can sort it. There's no need to be commenting. Like I said, refer to the FAQs, refer to the email that you've been sent, and obviously look at the policies. So let's take a look at the lower time frame. Let's actually go down into here. So we've had a push down. What's this reacted to? Nothing really. You know, if you look to the left, we've got a previous area of resistance, which had an area of supply inside there. Obviously, market reacted to that particular level. We can refine it, but it's just purely to get an understanding of why this price here got reacted, or why this area reacted to that level. Price obviously traded higher. We swept and we continued to the downside. Now, if your expectation is for lower prices, then of course you could look for continuations utilizing some form of confluence. Now, for me, I'd only be holding 10% of this trade after taking profit. So I'd already have some exposure into the market, not much. I'd have 10% of my existing position. I'd then be looking at realistically adding to that. Again, if you trade with 1 to 1, there's your 1 to 1. So you've comfortably hit your target. 1 to 5, comfortably hit that target. And I'll only go to 2 because realistically, they're the best strike rates for you if you're a day trader. Now, of course, you've got your 1 to 2. Yes, okay, you could have got 3R, maybe a little bit more, but you know, you wouldn't have taken your trade at you wouldn't have taken profit at the lows. Realistically, it's very difficult to catch the tick, be it the top or the bottom. So yeah, scalings are available. Potential 1 to 1.5 is obviously sitting there present. In terms of how you're going to run targets, so I get a lot of people always asking me, how do I actually run my stops? So there's a couple of ways to run stops. Obviously, you can use set BRNs, be it psychological levels. You can run point and figure stop and reserves, PARs, stop and reverses. You can obviously run some form of technical confluences, be it descending trend lines, running a stop above that level. You could run a VWAP from the previous high to monitor that. You can run moving averages, have your stop trailing above that. or you can just try to follow support, resistance, your ATR levels. So there's a number of different confluences. Alternatively, if you have access to volume, be it Bookmap or volume per the broker, then obviously it's also good to take a look at the volume there. So where is potential volume sitting, be it resting orders that are sitting on the market, that are good areas that could generate significant liquidity for you to get out comfortably without any slippage. Yep, correct. Happy hump day. So, couple of opportunities, couple of executions there. Now, at these levels, you would have most definitely been seeing people try to get long as well, and that's not an issue. You know, at 7,000, markets could swing both ways. You've obviously got 7,000 psychological level, which failing to hold above it. That's the only point, right? We've got this break above it. We failed to break and close. We've then traded down. We've broke down lower. We've closed. So if you're already long and you're looking at how do I get long or how do I continue in these trades, when you've got obviously demand here in control, you've got this, then we do have this. So if you're not taking into consideration this pennant wedge and this break of this and the failure to hold above that 7,000 level, you might have been looking for longs inside here. You know, you're trailing from the high. You've got a reaction from that previous point of demand. We've swept that previous point. So the expectation is that this is our last port of call. And I discussed this on yesterday's breakdown. Last port of call longs from inside this level. Expectation that we could either hold this higher or break above it. Obviously, in this particular scenario, your probabilities are going to be reduced because we've seen that we failed to hold above that 7,000 level, right? We failed to break 7,000. We failed to retest and respect it. We've traded below that we've traded below that bullish pennant wedge that we've seen in front of us. Now, obviously, the expectation is once we've traded to the downside, we're now looking to see at this moment in time where we're going to sit. So getting long inside that area there's still a probability that you could be long from it. But being the last port of call, when you've got a lot of areas of confluences and confirmations that are suggesting actually market could be struggling to trade or break above that 7,000 level, it puts us in a position of, should we wait? What are your thoughts on the S&P around that level? Were you taking longs? Were you taking shorts? But it does surprise me why people would have been taking longs up there. You know, just loads of confluences. Go back to yesterday's live stream and you can see how we discussed it and how we broke down that particular level, how we identified the potential for opportunities to get short once the confirmation come in. When this happened, when this move here was happening, sit on your hands. For me, nothing done. As we started to show signs that supply was taking control, once this high rejected and we started to trail lower, this low is weak. As we've always discussed in every single live stream, this low was weak. Now, obviously, after we've rejected, right here, there's nothing. Right there, you're still sitting in a moment of, okay, this could actually push to the upside. It didn't. It rolled over. We had a lower high printed. Market started to show momentum. Realistically, getting short from inside this area up here is the first quarter of the move for me, so I don't really look at it. Once obviously that gets confirmed that we're starting to trade lower, we know this lowish weak, so we're going to short into it, and then we're just targeting that 1-to-1 or that 1-to-5 or 1-to-1.5, sorry, or the 1-to-2. From there, obviously going into the US session, it's entirely up to you how you hold that position, whether you think we're going to get lower prices, whether we believe that the US is actually going to step in. Just read the way the market is, utilize the market experience, utilize technicals, utilize macros, the fundamentals that are coming out throughout the day, and then overlay it with some confluences through intuition. Let's take a look at gold, because of course we would have seen a move in gold yesterday that potentially would have excited some traders. I know some people would have got involved. Obviously, we'll break it down as we go. So we'll head out to the 4-hour. Let's have a little look. Yeah. So let's have a look. Where are we? Yeah, that's fine. All right. So during yesterday's discussion, obviously, we were let's break it down. Let's go lower. We don't need to stick on the 4-hour. We saw the 4-hour yesterday. We know we're inside that higher time frame level. 247. All right. So throughout pretty much the entire European session, heading into pretty much the New York session, we had a whole range, right? Markets broke higher, markets broke lower. No real major direction, right? Let's have a look like this. We'll just do this. So we had the break to the upside, sweep. We failed. We then had a break to the downside, sweep, failed. And then through Asia, pretty much Asia's markets picked it up. So yesterday was pretty much a very hard day to trade in gold. Very low range. Yes, you can trade ranges. We talk about it all the time, right? You can trade from the extremes, both shorts and longs, but I mean, that's a difficult range to trade. Bearing in mind that's the high and that's the low. For us to actually trade inside that and get a significant amount of RR, it's a lot more of an opportunity cost than it is in particular. So you'd be waiting to see a breakout to the upside or a break to the downside or an expansive move on that range. So once we broke out, we've come back in. We initially respected this, right, which is this part of this extreme. So if we are looking to go long on gold, we would need this. This isn't confirmed yet. So we would wait for confirmation to the right, okay? So how do we get confirmation to the right? Either you then look for another break to the upside, then you just get confirmation that demand's in control. Or you look for some form of bullish confirmation. However you want to do that, entirely up to you. So after this sweep, which we'll mark up here, we've got the sweep of the range, which I'll mark out as well. And then we also have the sweep of that previously respected demand, right? From there, this obviously showed signs of strength that we were going to be pushing to the upside. We came back in, we respected demand. So now we've respected the sweep. So we've got another break to the upside here. We then have another demand respected here. So either you're already in through some confirmations or confluences inside here. Realistically, this candle, you've endured some drawdown. Or alternatively, let me just mark that out so you've got it, so you can see what I'm talking about. I won't worry about the risk reward at the moment. I'll do that in a second. Alternatively, maybe something inside here. But trading at this time, what time is this? Midnight. You're not going to be trading this actually. 1 second. 8:30. Again, on a futures account, you won't be trading that if it's a prop firm. If it's a CFD brokerage account, you could potentially be trading it, but you have to be mindful that we're coming into rollover. Alternatively, trading after midnight. Again, if you're in Asia, that's not a problem. But the US market's closed. The European market's closed. So you're relying primarily on, well, the US market's coming into the close. You're relying on pretty much volume at the close or kicking in Asia. That's it. That is all you've got to rely on. So there's definitely a couple of trade opportunities to get involved in throughout Asia. And to be fair, right, the early part of Asia, we've got some very, very expansive moves. We've got a couple of decent bullish Marabuso engulfing candles in this move. As it starts to trade out into mid-Asia, 2 a.m. UK time through to 6 a.m. UK time, we obviously have some form of corrective moves, but the moves already happened. The expansive move during the opening session, as the opening time frame, has been pretty decent. So where do I see markets going now? Now, this is obviously something we touched upon yesterday, the 4-hour levels. Now, we've got this move overall on the daily, right? We're still bullish. We just have to be very cautious. Obviously, we respected that previous point of demand at 43s, 4500s. We've traded to the upside. I think this was the hourly time frame where we had a point of demand. So let's just grab that. Yeah, it was. So we're sitting inside an hourly supply, which is on the 4-hour, a buy to sell pivot. Okay, so we do have a buy to sell pivot demand, which has now turned into supply. And we're starting to create a rounded top. So we're either going to range out from here and do something similar. We'll range out to the sideways. We'll create an accumulation pattern. We'll get some form of breakout to the upside or some sweep to the downside, and then we'll trade in, continue to trade higher. And the reason we could see that is because we're only trading in the middle of the range at the moment. Obviously, we have that level up here at about 5400s, 54.5, maybe trading into 5500s. Right now, we're trading in between 4900s and 5100s. So there's nothing to say that we couldn't short from this. There's nothing to say that we can't short from this if we get the right confirmations. But you cannot just short just because you're in that level. You have to look at something on the lower time frame from a fractal perspective, at least to give you an indication of what could mature. Now, look, we're struggling to break the lows here. We're struggling to break the highs. So we're trading inside this wedge. And I appreciate it gets a little bit messy because there's a lot of levels in gold at the moment because of the way this market's moved. So I'll try to zoom in as much as I possibly can to try to shut out as much of the noise. The volume here is good. So there's a lot of volume in and around this level, which is the point of control at 5,081. We've got this sweep here. So this sweep, or this breakout to the downside, is only deemed as a failed breakout at this moment in time. Until we break structure to the left, it hasn't been confirmed as a sweep. And we are trading inside a range. So either we've got a failed breakout to the downside and we'll continue to trade inside the range. Alternatively, we'll failure break to the downside and we'll close up and then we'll start to see a break to the upside. Now, when we get that break to the upside, there's a couple of points to take into consideration. The aggressive approach is breakout execution with the expectation that we're going to get a continuation to the upside. The alternative scenarios are we wait for the breakout, we look for a retest of said broken level, and then we look for confluences or confirmations to identify if there is a continuation in the market. That is a safer mode, but sometimes, like always, some traders worry that they're going to miss the move. So you have to identify what's comfortable for yourself. This is purely overviews of educational analysis. This isn't my edge. This isn't my strategy. This isn't my methodology. I'll never reveal that. The alternative scenario that we could get, again, and this is what we've seen quite a few times, we could get an alternative fake breakout to the upside, which we then trade back into the range and we break to the downside. So you have to take that into consideration. 5,092 is obviously a target level we're looking at. 5,100s and above we want to see longs for. Alternatively, at this moment in time, until we get any confirmations, for me, there's nothing done in gold. So I can't really say much more. Let's take a look at silver. So again, silver, highly correlated to gold. Obviously, the move will be pretty similar. So we've had obviously the bullish move to the upside. Where are we reacting? So at the moment, obviously, we're trading pretty much inside this huge bearish engulfing Marabuso candle. We've got that previous area of support or supply of the order. So we've got support. Alternatively, if you deem it as demand. No, that's not true at all. You know, we have policies in place. There's, as per the email, whatever stage you're at, whether you've got something, you'll get something back. No one's going to be left unserved. So obviously refer to the email. It's a full closure. So it's all got full disclosure in that email. Understood. Yeah, I can take a look at dollar yen. So we've got that reaction off that previous support. So let's see how price obviously reacts to that. You could identify possible opportunities to get short, but again, you have to wait for confluences. Now, we were looking at how to get long this move yesterday, following obviously that breakout to the upside. You can see that supply is failing, demand's in control. As we traded into, you know, the European session, markets were very corrective, no real position to take advantage of. Wait for price to come back into some form of demand or come back into a discounted area that we could actually look to get long from. Obviously, we've got support down here. We've got the point of control. We've got demands around this particular level, 82, 83s. From here, you could start to look getting long. Now, obviously, as we got to about this area, we're starting to come into pre-New York. So 1 o'clock, so obviously 1 o'clock US time, coming back to obviously European time. Obviously, we've traded to the upside. Sorry, I just realized I'm on New York -5. So during European session, we had that expansive move to the upside, and we continued throughout pre-New York. Open of the US market started to range out, corrected back into demand where there's obviously support. We've got point of control, significant amount of volume sitting here, as you can see. If you obviously have the ability to look at Bookmap, which obviously provides you with volume direct from the CME, on the future side, it will just give you an idea of what actually happens from a volume perspective, where active orders are, where resting orders are. Price obviously traded back into a significant level, and we started to get later in the day as we traded into the US afternoon session, some moves to the upside, and of course trading into later depends how you trade, right? CFD brokers, CFD props, you can hold overnight Monday through Friday with most of them, so a lot of opportunity to the upside. And then obviously, again, expansive move to the upside, which if we overlay gold, just to show you how that would look, I'll just overlay that one. So, you know, highly correlated throughout. You know, look, peak of the move, low of the move, high of the move. So you don't want to be long one asset, short the other instrument. Okay, cool. So again, nothing done as of yet in gold or silver. Looking for further confirmation as to what the markets could do. Let's take a look at DXY. That will also give us the best overview of how to trade or how to identify what euro dollar's doing. Oh, yeah, as per the policies, euro dollar. So DXY. We're still pretty much trading in that expansive move that I discussed yesterday, right? We had that bullish move to the upside. We had that bullish accumulation wedge that we were looking at. Again, another pennant, and we broke out to the upside in the more early hours of Monday. And then, of course, throughout Tuesday, we've corrected. So we're still in this leg. We're still expecting price to trade up to around 98 handles. Very corrective at the moment. Obviously, we previously gap filled. This could change, right? So looking at the way the markets have been and the news is in particular, with NFP cancelled on Friday, we're looking ahead towards other data and also looking to whispers and chatters to identify how markets are going to react. Because obviously the official release has now been removed because of the partial government shutdown. We're looking for any signs, any chatter that the market is going to do something. But because all of the good news and the bad news is out, market's waiting to digest further rumors. So with the uncertainty out there, I definitely see, you know, a lot of ranges coming into the market. And bearing in mind, the markets range more than they trend. Now, if obviously I'm looking at longs in the DXY, then realistically I'll be looking at shorts in the euro, and we'll overlay the euro because again it's inversely correlated. It makes up the DXY basket by around just over 57% and change. I'll use FXCM. So, you know, if we look at where the peak of the low is on the DXY, we had the peak of the move in the euro versus the dollar. Expectations at the moment from a euro dollar perspective would be looking for continuations to the downside based on the formation of a bearish flag, right? So if you're short anywhere inside this leg, then you're either looking to continue to capitalize or exploit that move to the downside, as you would be with the exploitation of the move on the DXY to the upside. Again, bear in mind that FX is a mean reverting asset and a mean reverting instrument. So we are expecting, based on the structure that we're seeing in euro dollar, we would be looking for now this, I don't really necessarily think it's going to be this entire leg to the downside, but if we're trading patterns like this one in front of us, or we're looking for additional confluence and confirmations to overlay a reason to get short the euro and look actually to be long the dollar, then the expectations about our price targets would be the continuations for the shorts as per the entry. Okay, so what do I mean by that? If it's a bearish flag continuation pattern, the expectation for prices to continue in the direction of how it entered the formation of the flag, right? So in this case, we had a bearish leg. That would be the entrance of price, the formation of the bearish flag, and then the expectation will be continuation to the downside. Now, there's 6+ ways a bearish flag or any pattern can play out. We have obviously clean breaks to either side. We have fake breaks to either side. We have range moves that invalidate the pattern and continue to trade to the right-hand side. And then, of course, in addition, we have fake breaks to either side and then continuations in the opposite direction. So, obviously, expectation on dollar is for continuations for prices to trade higher and the euro to trade lower. Now, as traders, we need to adapt, we need to evolve, we need to stay composed with what the market is showing us. So, you know, this isn't 100% guaranteed. These are probabilities based on technical analysis overlaid with macros, and then obviously we look for confluences to get involved. The rhetoric could change. The US Fed and the US government, or the US government in particular, could close the shutdown and it could go full open again. Donald Trump could tweet something and markets could go ecstatic and chaotic again. We could see the Fed cut interest rates randomly, right? And aggressively. Now that could send two different messages to the market. If we cut too aggressively, that means we're too late. It could send shock and fear throughout the market. In addition to that, depending on how they cut and their tonality and their comments behind it, it could obviously be good for the markets, which would mean we see indices, equities rally to the upside. So, yeah, in terms of my overview, expectations at this moment in time, euro dollar to the downside, DXY to the upside. That's current expectations for where market's at. I'd like to see, you know, maybe euro trading. I'd love to see parity on the euro again, unfortunately. But at least in the dollar index, I'd like to see 98 levels hit. But at this moment in time, I don't, you know, we need to wait for the market to play out. If you're already long, stay long. If you're not in, wait. Because, again, what we're doing right now is creating lower highs and lower lows. Obviously, you can't trade the DXY. So you'd be looking at trading the euro dollar. So anything I'm saying in this realistically will be inverted. So with the euros, which I'll go into the euro dollar quickly just to show you, because some people struggle with inversions. So with obviously euro dollar, we've had that huge move to the downside, which I touched upon on the comparable charts. I mean, you know, we do have this formation of a bearish flag. So again, you could trade from the extremes if you do want to. If you believe the euro is going to trade lower, like so, just based on front leg patterns, that's all we're looking at in this education in this regard. Obviously, we'd be looking to trade short from the extreme. You know, depending on how you've got involved, you would have had just your level set up here. Trading, realistically, your stop would be somewhere up here to keep out the way. First target would be the extreme of the range, which actually is a negative RR, so you wouldn't trade that. If obviously you're ignoring that and you're focusing on specific fixed RR, then you've got your 1-to-1 about here, which actually is below that next target level, which is the beginning of the range, which is that level. That's 0.7, again, negative RR. But if you're trading that fixed RR, your 1-to-1's here. You've got your 1.5, you've got your 2. And if you're actually looking to target the flagpole extension, then of course realistically you're looking at your 3.82. But again, no one's a prick for a tick, so you're not going to be hitting that as you take profit. Now, when you're trading extreme ranges, you have to factor in the probabilities of it. You're trading in extreme range, the highs weak, the lows weak, because they're not creating in most circumstances new highs or new lows. And in traditional circumstances, they're equal. Now, they're both weak. In this particular scenario, we have got higher lows being printed, and we've also got higher highs being printed. So this could trick certain traders because this is actually a bearish pattern. But like I said, there's at least 6 to 8 ways this could trade out of that level. But for me, I'd be looking for bearish continuations. I'd be looking to get short at this moment in time. Whether I'm getting short from the extreme of this range or whether I'm waiting for further confluence and confirmations, that's entirely subjective based on your own edge. So yeah, expectations will be to continue with shorts on euro versus the dollar, or continue to be long the dollar at this moment in time. Bitcoin. So pretty much coming into the last instrument that we focus on during these live streams and these educational pieces. So needless to say, as per all of the previous discussions, all of the previous live streams, all the previous analysis, Bitcoin unfortunately is facing pretty much its worst stretch in months, right? We're seeing Bitcoin now trade, well, we've seen it trade below 76,000, which was that previous level that we needed to see. It's raised all of those moves since November 2024's elections. There's a lot of liquidations coming in at this moment, which suggests that the narrative has failed to hold up during the recent crashes. But again, all of these ideas, all of these pieces of education and pieces of analysis have been discussed on live streams, stretching back from day one. So we've broken down all of this live. And obviously, once we traded out of these levels, we were looking at, okay, can Bitcoin recover? If we are looking for that upside, which was 132,000 based on previous moves by June, which doesn't look like it's going to happen because we failed to respect this level. We failed to trade higher. Now, again, this is a bearish pattern. We've now failed below that 80,000 level, which was our first target from these shorts. So as we go down into, let's say, the M15, which you can see. So we've broke to the upside, we've failed, and we've then traded lower. Prices obviously correctively and bullishly ran back up into the extremes. Again, failed to recover. So from here, you start to look at, let me just move this a little bit. From here, you're starting to see, okay, we could just hold this extreme and then we could look to trade higher. But what we actually got is a failure to the downside. So now we're looking at, okay, this low is now broken. We're now looking for continuations to the downside. How are we going to be looking for that? Whether that's through descending trend lines. Yeah, nice, Anthony. You are a very good trader. Always said that. Break to the downside, continuation. Obviously, as you can see, from 87,000, maybe there's potential shorts. Obviously, and you can scale in pretty much all the way out. Your point of control is potentially a good area to get out. I mean, goodness, you know, we've called these ideas out ahead of time a lot of the time. So, you know, whether you're learning or taking advantage of that, I hope you're getting value from these live streams. And now we're pretty much, this is what you call an expansive megaphone. Yes, you will, Cat Serious, as long as it fits the terms and it fits the policies, which is per the email. I know. I appreciate that. It really is. So, you know, it wasn't a decision taken lightly. Obviously, we've got this, what we would deem as some form of an expansive megaphone pattern. Okay, again, this suggests that there is a reversal coming in Bitcoin at this moment in time, not down the line, at this moment in time. It could fail, right? And this is how we would look at it. So we have your lower high put in. We've now obviously tried to create a lower low. We swept that low. We've created a equal high. And again, we've swept that low. So the expectation right now is for price to trade back into the extreme of supply, which is around 77,000 to 79,000, maybe a little bit above. You know, it could be a sweep. We could get another sweep, trades into about 80,000, then continues. This isn't guaranteed. This isn't fact. We could trade into the extreme. So I'll just mark out the extreme like so. And then from there, we could get an expectation to continue to the downside. Again, expansive megaphone pattern. And then we might start seeing demand take control. That is how that pattern will traditionally pay out. Obviously, there's multiple ways it could pay out, but that is realistically the definition of said pattern. But what we're seeing is this: multiple attempts to trade lower and failing to close, which could suggest that market's going to start trying to base from here and trading higher. Now, in terms of targets, if I was looking to get long, without taking into consideration fixed RRs of 1 to 1, 1 to 1.5, 1 to 2s, you'd be looking at areas of volume. So, you know, what's the key area? 80,000s. We've got this point of, I mean, front leg. This is front leg only. So realistically, you know, these are going to get consumed. But these are realistically first areas that I would consider targeting if I'm swinging crypto. Now, obviously, bearing in mind, I'm an uber Bitcoin bull. I've been long Bitcoin for many, many, many years. So obviously, I am somewhat biased for the expectation for us to trade into 125,000 and 132,000 and beyond. But at this moment in time, obviously, we're still bearish, but we're inside this range, but we're slowing down. So unless there is further liquidations, further catalysts to this downside move, we're starting to look like we're trading inside a range and that we're exhausting that bearish move. So whether the market is now looking to trade up into the premium levels to get short or for allow to better areas to get short from is yet to be seen. But this pattern right here suggests that we are starting to exhaust the downside moves. We're now looking for new volumes to step into the markets. And we're sitting on our hands waiting for either support, demand to be respected and higher prices to come into play, or we're waiting for further confirmations that the narrative is to continue to the downside. So again, most instruments right now are sitting in a state of wait mode. Sit on your hands, preserve your gunpowder for the next trading session or for the next availability in terms of moves. And that's pretty much it. You know, if I go down to the M15 just to see what kind of color is the market showing us, I'd expect this to break to the downside. If I'm honest, I'd expect this to fail, which it has, as you can see. This is traditionally a bullish pattern anyway, right? But I don't like the way this is because I'd like to see us come back into demand and then trade higher. But traditionally the way this pattern is we'll get a move like this, and then this will continue to be expansive to the upside. That's how that pattern realistically is. But as you can see, we're starting to break to the downside. Now, whether we fake break, continue to the upside, again, yet to be seen. And this is how you have to wait for confirmations and confluences. But what we can see is lower highs and lower lows are being printed into this market. We're still holding the absolute extremes of that previous ascending range. But from here, you could start to look for shorts into maybe 74,000, 73,000, as per that higher time frame pattern that is developing out on the higher time frames. Does anyone have any questions at all about the analysis or what markets are doing, maybe even the outlook for the rest of the week? Overall, the outlook for the rest of the week is as follows. Due to the absence of the official government data, NFP, the market's going to be hypersensitive to corporate earnings and private sector reports. So if you're trading indices, just bear that in mind. Today, Wednesday, we've got reports coming out from Alphabet, which is Google. Those earnings come out after the bell, so just be careful. It's definitely going to be an ultimate test for the AI trade, because recently we saw the softer guidance coming out from Microsoft. Tomorrow, Thursday, we have Amazon and Palantir earnings. We have the ECB interest rate decision. That will support the thesis on the euro dollar, which we just covered. Now, the ECB is widely expected to hold rates at 2% despite the euro's recent strength. And one thing that most traders and investors are going to be looking for with the NFP delayed on Friday is the Canadian labour data, as well as the private ADP payrolls to move the USD. So bear that in mind. If I'm looking at summarizations of instruments, gold, neutral, consolidating, Bitcoin, currently neutral, expectations for hopefully demand to hold to get bullish, because at the moment it is bearish. Euro dollar looking for consolidation moves before trading lower. And of course, that would mean that the DXY basket pushes higher. So that's pretty much it from myself. Appreciate every single one of you tuning in, all of your comments, all of your queries, all of your opinions and viewpoints and overall conundrums that we're seeing. Every single one of your views is greatly appreciated, is greatly respected and greatly honored. If you are trading today, as always, trade safe, trade smart, trade Seacrest. And again, if you're following the channels, please like, subscribe, turn on your notifications, because every Monday to Friday, same time, same place, hosted by none other than myself, we break down the markets on a fundamental basis, a technical basis, and we also review existing ideas, existing positions, and look at where realistically we can prepare for the conditions of the markets for the remaining trading day or the remaining week. But thank you very much. Trade safe, trade smart, trade Seacrest. I'll see you this time tomorrow, but thank you very much for the love and appreciation.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check.